Hey guys, this is Vic from Grasping the Market and welcome to our morning briefing. It is Friday, May 10th, 6:09 a.m. So let's get cracking. There is significant change on the longer time frame as the April low has been taken together with the April opening gap that we had in this area. This means that the upwards dominance of the long-term buyers have been compromised for the first time since December. We continue to carry forward the lack of excess at the top. And remember that the all-time highs were tagged over in an overnight session. So this leaves a questionable structure to the upside. On the daily, we saw an attempted break from the 2-day balancing range that we have over here to continue the immediate auction lower. Now, the reason I say attempted is because the market rallied back inside this range and settled one tick below the Wednesday low, leaving open the possibility for daily excess and a failed break from this balance. This needs to be confirmed as usual. Zooming into the market profile, we see important clues of how the move happened in the morning and how the day developed. First of all, we had our focus was the ability of the market breaking out of this two-day balancing range. Now, the open was already outside the range, and if we include the overnight, we can see some important stuff. And we did tweet this prior to the session open. We said the net positioning of the overnight before the open was short, and you had a very quite decent POC inside the range here. These are the 2-day range. The blue profiles are the overnight session. So you had a net short positioning and you had a prominent POC inside. And we did say that if the market failed to go back up to kind of balance this overnight net positioning and revisit a prominent POC, if that didn't happen, that would expose weakness in the market. So on the A period, the market opened and did attempt to go in, but it couldn't even reach the low of the range and started doing volume close to the overnight low. That suggested that there was weakness on the market. So all traders that went short when that happened, that was a very, very good call. Then the market starts breaking out of the 2-day range and starts moving down. Now, after the 4th period, on the D period, they were not doing extensions further than the 36, 37 area. So being this a big move, because this was 59 to 36, it was a big move for short period of time. There was the possibility of the market getting a little bit too short, especially because the overnight had a net short positioning already. So there was the odds were increasing towards covering rally, which I think this is exactly what happened here. But the interesting thing is that happened in tandem with some headlines coming out on the trade talks front. So you had the covering rally plus new buyers jumping in on the news, and that's what pushed this rally so hard back into the range. And for the rest of the day, all the market tried to do was push. Now, the lack of significant excess on either side of the profile. If we close this and let's take out the overnight here, lack of significant excess at the bottom and at the top suggests the market may not be done in either direction. We had an afternoon pullback that closed the upper distribution single prints to the tick, and that leaves a very weak, questionable low / structure. But I'm very curious that despite the several attempts we made to the upside into Wednesday's range, we could not significantly breach that range. leaving the question mark of whether the market got too long here or there was no interest, no buying interest at all inside the range. That needs to be answered. Um, as we mentioned earlier, the potential for daily excess or a fail break needs confirmation. That confirmation will come in the form of acceptance above 2877, which was yesterday high. If we start building acceptance here, that will confirm the daily excess and the fail break from this balance. So our immediate focus for the morning is on value developing relative to this upper distribution. If we build acceptance on value below the afternoon pullback, which is at 28.59.25, that will denote change and start increasing the odds to downside continuation. However, a material move like further down may not happen immediately because this range, I mean, it is like kind of compact, but this range is quite big and we will be trading inside the range. So to break out of here, we need a big move. Markets can move really quickly when volatility is high with headlines coming out and all the trade talks happening and everything. So we need to keep an eye on all these factors, but remember, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.